The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
All right, folks, not Larry Pesavento. Tommy O'Brien coming to you live from TFNN. Producers got the wrong login there. I'm sure they'll get that fixed. Larry Pesavento, he does his programs at noon Eastern time these days, folks. If you hadn't tuned in, a new morning lineup kicking off on Monday. I'll be doing the 9 to 10 o'clock show. We got our man Basil Chapman live from 10 to 11. Fast Market from 11 to 12, and our man Larry Pesavento, he's going to be coming up with his Trade What You See program at noon Eastern time. All right, we got a big day in the markets, folks, jumping right into it. S&P's negative by 14 points right now, trading at 39.38. You got the tech stocks pulling back with a little bit of rising yield. Yet again, NASDAQ 100 right at 13,000 off 143 points. That's more than 1% in the red right now. 12,999. The Dow positive by 35 points. The Dow trading 32,757 after making all-time highs yesterday. And the Russell right now negative by about 13 points, about 0.6% in the red at 2303. All right, we're going to jump right down to notes and bonds. I talked about it on the update at 9 o'clock. The 10-year continuing the run to lower price and higher yield. We're sitting on a yield right now approaching 1.7%. Remarkable acceleration when you consider where we just were. Look where we just were on February 11th, folks. You were at almost 137. We got now a 131 handle, let alone if you go all the way back to August, sitting at 140 in the 10-year. We're now down 9 full points in the 10-year from where we were in August. We've seen yields rise from negligible at that point. I think it was about 0.5%, 0.6% on the 10-year. We're now trading with a yield of 1.67% on that 10-year. And we'll jump to some commodities. You got gold down about $3 right now, trading at $17.27. You got the crude contract down 85 cents at $63.95. And we'll jump over to the VIX, the volatility index. Something to keep in mind, folks. I talked about it on the program yesterday. A little bit ironic that you have the VIX pulling all the volatility out of the market, reaching the lowest levels we've seen since the pandemic began, 1933. There's the low on the chart, folks. It spells it out. Now, I have some of the other lows marked on this chart. Whether you go back to where we were in February, you hit 1969. That we saw what preceded. We had some volatility after February. We had the yields accelerating. We had tech stocks pulling back dramatically. You have a high back there, whether it was in December, right? We had a low of 1951 in late November. We had a low back in August of 2028. Talk about thinking would be out of the woods. Not so much. Some drastic highs since then. Do we have another high coming to us in the VIX? We're going to find out. And today's going to be a big day when we talk about the Fed. Jumping over to the Fed, pulling up the stories. We'll start it off with Chairman Powell, the Federal Reserve. They end their two-day meeting today. 2 p.m. Eastern time will be their statement. 2:30 p.m. Eastern time will be the press conference. I imagine the press conference is going to be an interesting one. The statement, all but assured that they're going to keep rates where they are. They're going to keep their bond buying and instrument buying purchases where they are. But to get into the nuts and bolts of it, I spent the first 2 sessions of the program yesterday talking about the Fed because of just how important today's meeting could be. And it's especially important when you look to the fact that you have markets sitting at all-time highs, you have the VIX at lowest levels that we've seen since the pandemic began, and you have a forecast that is about to dramatically increase. The last time the Fed was out there with their forecast was in December, all right? And things have changed dramatically in terms of a vaccine rollout that is far exceeding the expectations that we had in place, especially that we had in place in December. You're seeing economic projections across Wall Street that are now, whether it's 7, 8, 9% projected for the fiscal year growth. I think the Fed had a number of about 4.8% in there, all but expected that they're probably going to bump that number up in terms of economic forecasted growth up to about 6%, maybe 5.8%, some estimates. The balancing act that Chairman Powell will have here is how you discuss the fact that they are upgrading their economic forecast in a pretty dramatic fashion, while at the same time, in no way upgrading the timeline of when they will start pairing, whether they'll start raising interest rates, whether they'll start decreasing the amount of bonds they're buying at $120 billion a month right now. So let's get into some of these details. You get the FOMC, all but certain to hold the interest rates near zero at the conclusion of its two-day policy meeting today, and repeat a vow to keep buying bonds at the current $120 billion monthly pace. So none of that is expected to change. We don't know what's going to happen. It could. If any of that changes, the market will flip out. It's not going to happen, though, folks. All right, rates are staying at zero. Bond purchases are staying where they are. The statement is probably going to say they're staying where they are for the foreseeable future. Now, you have in here as well the dot plot getting a lot of attention, all right? Dot plots, you got 18 members on the Federal Reserve Board, I believe it is. Let's jump into where we are here. Come on. I'm going to get the number of 18. We got a lot to break down in here. Excuse me while I find these numbers. Okay, we're going to jump to it. I'm missing the one where it's 18, but so you have projections for interest rate on the dot plot. 2/3 of economists surveyed by Bloomberg expect policymakers to continue to signal no liftoff from near zero rates through 2023. Here we go. 18 central bankers, this is what I was looking for, could drift their dots higher. How's the market going to react to this? This is what I'm really interested to see. Statement at 2 o'clock. If you got positions open, folks, be paying attention to what's going on this afternoon, especially at 2 o'clock, 2:30, 2 till 4 p.m. this afternoon. 18 central bankers. In December, you only had one policymaker predicting a hike anywhere next year in 2022, and you only had 5 seeing one, at least one, by the end of 2023. I imagine you're going to see those numbers tick up. How many of those 18 Fed members, those Fed officials, decide to whether they project any rates rising through 2022 or any rates rising through 2023, how's the market going to react to that? You're seeing a lot of speculation, of course. All right, we got one senior economist out here saying the first thing I and most people will look at is whether we have one rate hike in 2023. Where are those dots going to forecast? All right, now the upgraded forecast. That's going to be a big deal, too. Private forecasters have sharply upgraded their estimates. I mean, you look at the Wall Street estimates, folks, as I mentioned, it's either 7 or 8% basically is what they're looking at. Policymakers will probably upgrade their projections for expansion in GDP this year to about 6% to reflect the additional fiscal aid and improving outlook, according to economists surveyed by Bloomberg. The Fed, it's always a little bit more conservative. To not make grand leaps of expectations. They're going to probably come out with a number that's looking for about 6% growth this year. But boy, that's a strong number. Now, Chairman Powell, he's not just looking at the S&P 500 at all-time highs, folks. He's not just looking at the Dow at all-time highs, okay? What he is looking at is he's looking at employment. They want full employment. And rightfully so, he's saying, listen, we got 10 million people less on the payrolls than we did a year ago. We are far from full employment, and we're going to be in there firing bazookas of cash at $120 billion a month until we reach that level, and we're not even close. We're going to find out this afternoon. Stay tuned, folks. We're going to come back with our man Kevin Hinks talking markets. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got 12 minutes to go until the opening bell. We got S&Ps negative by about 15 points right now. Tech stocks pulling back with a rising yield. We got the NASDAQ 100 off by about 138 points, and the Dow positive by 33 after making a record yesterday. We're about 100 points away from that record high. Let's go over to our man, Kevin Hinks. Folks, 11 a.m. Eastern time, every day on Tiger TV, the TD Ameritrade Network, the program Fast Market. Kevin Hinks, Alex Coffey, and the team at the TD Ameritrade Network breaking down the day's action, breaking down hypothetical trades, whether it's during earnings season, whether it's just during the season as well. Kevin Hinks, we got a big day today. What's going on, man?
Good morning, Tommy. Yeah, today is all about Jerome Powell's ability to explain his views to the overall market. And right now, as we said, there's a big positive correlation between bonds and the NASDAQ. And the NASDAQ is heavy when bonds sell off. So the 10-year yield now sitting at 1.66. We'll see what that brings in terms of buying of bonds or stabilizing this market. It's certainly a big day to start the day. We just got some housing starts and permits numbers that were extremely weak.
Yeah.
But if you think about it, if you think about all the inputs to building a house and the high prices of those houses, right? Labor, materials, lumber, all those things, you're not really surprised that possibly builders aren't willing to commit a bunch of capital at these levels of the inputs. So a little interesting there. I'm really watching, that's all secondary data, the data that's come out this morning. This is all going to be about Jerome Powell and his comments at 2:30 Eastern time.
Yeah, I'm excited, man, for 2 o'clock, 2:30, 2 to 4 p.m. I'm going to be glued to it. I'll be watching Fast Market at 11 o'clock Eastern time. Talk about the bond market, note market, giving him no reprieve today, as in we're getting lower price across the board. We're getting higher yields that we haven't seen in a long time this morning. I was talking about it yesterday, tried to talk about it today as well, just in the first segment. economic forecasts have changed dramatically since the last time the Fed came out in December. And like you said, Chairman Powell, he's going to have quite a balancing act, man, where he tries to talk about improving economic forecasts throughout the fiscal year and probably beyond with the way the vaccine rollout is going. We're only a couple months away, hopefully, from getting really over this thing and really turning a big corner. And at the same time, he's going to be talking about that they're changing nothing they're doing, right? And how the market plays into that. And really interesting, you get the yields at basically the highest levels we've seen. I'm sure he's going to get some questions saying, even on a day like today, right, we got the 10-year down 10 ticks, and we got a yield of almost 1.67%. I wanted to bring it over, Kevin, to the VIX, if I could, because really interesting as well that we got a low print on the VIX of 1933 yesterday, coming into such a volatile event like this, in my perception. You know, you have the S&P sitting at basically right near all-time highs. The VIX is predicated off the S&P, so it makes sense when you're sitting at all-time highs, you have a low level like that. But do you look at anything, Kevin, on a day like today where we might have some volatility this afternoon? And we have the VIX rising now. We're up, up to 2087. But in my mind yesterday, I saw a little bit of a, not weird dynamic, but interesting dynamic of a lower VIX at a time when you have a volatile event potentially on the horizon like the Fed today.
Well, unfortunately, when you're looking at the VIX now, if we start to normalize these markets, Tommy, remember that the VIX at 20 is still 4 points and change higher than the average. Now, it stayed above that average for just about all of the last 365 days. It's been above that. The question is, you have to also look at the calendar and where we are. And the fear is if we start going back to normal, that the VIX could continue to come down. And let's face it, it's had a pretty solid lack of response to volatility in the last few sessions. So, sure, it's up today, but I think VIX and overall implied volatility of options is something that everyone should be watching because as an options trader, you always have to have your eye on the calendar. And where are we? We're going into spring, which means we're, if you're looking 30 to 60 days ahead on the calendar, that's summer. So you got to be careful of don't get caught with levels of implied volatility here.
It's a great point, man. It's going to be a summer like none other, too. Talk about trying to take some summer vacations, man, and some pent-up demand. Talk about an exceptional year as well. Not even the norm. I got the VIX up there. Just remarkable in terms of the lows were anywhere near 20, and we had multiple spikes even after the first initial one that got us up near almost 40, let alone getting up to almost 30 within the last calendar month alone for the VIX. So we still have earnings season going on, Kevin. We got some names coming out this week. I know you always talk about Nike kind of as the big name that might wrap things up towards the end of it. What are you guys going to be talking about on Fast Market today at 11 o'clock?
Some earnings in, Dollar General, Five Below. Lightfolio is going to do a presentation on Five Below. Discount retail in Dollar General and Five Below. But in the first segment, we're going to look at Walmart, the retail behemoth, which, let's face it, has corrected pretty hard down from the mid-150s to it just bounced back. It got down to into the mid-120s. So a little strength out of Walmart, but a pretty sizable correction over the last few months. And we're going to look at Walmart today, Tommy.
Awesome. I will be listening. We got some Walmart for full disclosure in my newsletter, Kevin. Really interesting to see how some of these consumer stocks, right? I mean, the $1.9 trillion stimulus passing out there. You're going to have consumers with a lot of money in their pockets. I mean, Walmart on one day, man, they had a pop going. I think it was, March 10th. So you're going back a week ago today. That was the day that really things began to pop on the consumer side. You had Walmart trade from 128 and change to 133 and change, $5 move, huge move for that stock. But like you just mentioned, man, I got the chart back here and pretty remarkable. From the lows we had, Kevin, to the highs of 153, this thing backed off a full 50% of that move down to 127, giving back, a tremendous amount from the 153 like you talked about. Yeah, we bounced a bit up to 133, but pretty harsh and coming off the heels of their last earnings as well, where it really kind of dropped out of bed from 147. The next day you were trading down to 138 and change, and that trend continued all the way down to 126. It'll be interesting to see a lot going on today with the Fed, the stimulus, the bond buying, the statement, all but assured to be keeping things as they are. But like you mentioned, man, Chairman Powell, he's going to have quite a task ahead of himself for his press conference at a day when we're getting higher yields than we've seen during this pandemic for the whole time. Well, Kevin, we appreciate the update, man. We look forward to the program, as always, at 11 o'clock. You have yourself a great Wednesday, man.
Thanks for having me on, Tommy. Always a pleasure.
My pleasure as well. Take care, man. Folks, check it out. Every trading day, 11 till 12 Eastern time. You heard the education we get in this small interview. If you haven't checked out the program, check it out. Kevin and the team do a great job. He talked about the VIX. Really interesting dynamic going on, like Kevin talked about. When do we get back into the normalcy of a VIX of a 16 level in normalcy? I mean, this is the year going back. But you put this thing on, let's say, even a 5-year weekly, and you see the last year was basically an anomaly, as it is in most things. The last year, an anomaly in many ways in our lives. But you see where we were leading up to this. I mean, my goodness, you go back to 2017, the whole year we practically flirted with the VIX at around 10, let alone even coming into 2019. We were down at 11 on many occasions. The new normal, a VIX sitting at about 20. We'll see how that reacts today. Stay tuned, folks. We'll be right back after the break.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the markets open. We get the S&Ps down about 16 points right now, trading at 39.37. NASDAQ taking a little bit of a hit, down about 130 points, just above 13,000 for the NASDAQ 100. The Dow clinging on to some positive gains, up about 10 points on the session, make it 6 points now. And the Russell trading lower to the tune of about 20 points in the red right now. Let's jump to notes and bonds. Little bit of a bounce off the lows right now to the tune of about 5 ticks. We reached the low at about 8 a.m. Eastern time this morning. You're looking at yields in the 10-year right now. We're correlating to a level of 1.66%. Chairman Powell, he's going to get some questions on a day even like today. The trend continuing, lower price, higher yields. They're going to be increasing their economic forecast and how he answered those questions. It's going to be an interesting afternoon in the markets across the board. Kevin Hicks and I were just talking about, they're going to be discussing Walmart in the first segment of Fast Market coming up at 11 a.m. You combine the stimulus deal we have, you also have to look at the amount of money that has been saved during this. So Bloomberg Economics estimates about $1.7 trillion in excess savings Americans have amassed. You're staying at home, you're not out as much, you're not traveling as much. The pent-up level of demand, it's going to be something we've never seen potentially in at least my lifetime, folks. As the economy reopens, consumer spending over the next 2 quarters is likely to be the strongest such period in at least 70 years, with the rebound in services leading the way, according to economists at Wells Fargo. A lot of the snapback in spending will come from those more leisure expenditures, your discretionary expenditures. We really expect to see, we really expect to bounce back once the economy returns to some semblance of normal. I've been saying it many times on the program, folks. It's time for rhetoric to meet reality. We're 2 to 3 months away from basically every American that wanting the vaccine, having access to the vaccine. The next conversation is going to shift to people who are not choosing to get the vaccine. We've been supply constrained up until this very moment, basically and we still are supply constrained. That's probably going to change in the next 3 to 6 weeks. People are going to have access. The next battle is going to be getting people who are hesitant to get in and get the vaccine as it is safe, folks. It is safe, all right? Do the research on the data, especially the data talking about Pfizer, Moderna, Johnson & Johnson in this country. It's safe. It's effective. It's how we get out of this, all right? Once we do, though, this market, all right, we talked about the VIX. I mean, we're coming into the summer, as Kevin said, but boy, you're seeing the VIX rising again. We're almost hitting a 21 handle. Now, what is going to happen when we come into the likes of like a non-farm payroll number to the tune of, March, April, and May employment? And we have grand expectations for all those services jobs coming back, right? Maybe the vaccines are completely open on May 1st, right? That means basically that in the middle of June, what's the June non-farm payroll number supposed to look like? It's probably going to have to be pretty much gangbusters. And if you don't see those numbers start to be delivered, you might see some volatility in the VIX in a big way in the next few months, even coming into summer trading. This year, like no other year out there, folks, as in the last year we've had, we'll see if the VIX retains any form of normalcy. But as you see this morning, not quite out of the woods yet, with the VIX rising towards about 21 coming into Fed Day. Jumping back to some of those numbers that we have in terms of pent-up demand for spending, okay? Revenge spending was seen as early as last April in China. So China, they locked it down first, right? Dealing with the virus over there, of course, COVID. And they came out of it very quickly because China just locked everybody down, stopped the spread, got out of this thing. And they talk about the government began easing back to normalcy after the nation was the epicenter of the coronavirus pandemic. The impact on companies was clear. They talk about the U.S. jeweler Tiffany. Their China sales surged 90% in May from the year prior. Hermes, the French luxury label known for its $10,000 handbags, how about raking in almost $3 million in one day from a store reopening in Zhangzhou? China has been recovering ever since, even as the virus continues to rage across Europe and North America. Those numbers, though, folks, it's going to be remarkable how this plays out, because there is a pent-up level of demand that we've never seen in our lives, and I think it's right that you're going to see some roaring numbers once we come back from this pandemic, but we got to get there first. We're not quite there yet. The numbers are still there, folks. In Florida, 7-day average, I mean, it's thousands of people that are testing positive still on a daily basis. Be safe out there, wear a mask, social distance till we get over this thing, and we're almost there in a big way. Exciting times. I mean, I keep saying it, folks, because JetBlue, it's the one I'm familiar with, just because they have great routes going from Boston to Tampa. You can book flights only for like the next 2 weeks, where you can make no change fee, pay no change fees. Think about where we were in the depths of the bottom of the pandemic, right? Airlines would do almost anything to get you on their flight. Well, that's about to end in 2 weeks because even airlines know we're there. People are going to start booking travel. We're 2 to 3 months away from a majority of the population hopefully being vaccinated. How that plays out, how it plays out, whether it's domestically first, of course, international travel, a whole nother deal. But I encourage you, if you're thinking about it at all, folks, no change fees on JetBlue right now. Some great deals. JetBlue should be sending in the dollars for their marketing, for all this good press they're getting. But it's just a service to the listeners out there because there is still the opportunity to take advantage of some of those deals. But we are right on the cusp of all of that ending as we come out of the COVID pandemic. We're right there. They got April 1st, I think, is the last day that you won't be able to make change. You won't be able to book travel without paying change fees. So get in there if you're thinking about it all. Book a flight. Worst case scenario, you cancel it. You free roll the whole thing. There's nothing to risk. You book yourself a fare because I can't wait to get on the road. See my friends, see my family. Just had a son last month. Get some of my relatives down there. Make it up there eventually. The whole kit and caboodle. So I'm not the only one that's going to be pushing for that type of an acceleration. Okay, jumping around a bit, one story that caught my eye here. Now, Direction, they are a sponsor, so we got a bias in there, full disclosure. But, man, this one always confounds my mind. So the Ark Etf, right, Cathie Woods, she's like the superstar on Wall Street, right? I kind of never understand the fascination across the board. She started a great fund. That fund invested heavily in tech, and tech blew up. Kudos to her, okay? But there's a lot of people that could have said, I'm going to start a fund and I'm going to invest heavily in the tech stocks and they're going to go through the roof, okay? They have, I think, about $17 billion under assets. And what this article talks about is a copycat. The copycat is a Direction fund. We've had Direction on the program, talking to Tom, talking about this fund in particular, the Direction Moonshot Innovators ETF, symbol MOON. Risen 39% this year. Ark's been a tough one. I'm going to pull on for both, you know. I mean, you're a hero or you're a zero. I mean, look at the run just from yesterday. From 130 down to 121. You have the NASDAQ 100 off 180 points. You put this thing on a daily, and you can see. You back it up to the beginning of the year, and we're actually negative now on that fund from 123 down to 121. You take a look at Moon. Difference being there, this just came out in terms of November. You back it up to the beginning of the year. You're at about 31. You're at 41 today. A little bit of a difference in terms of where you're investing in these two. A lot more biotech going on in the Moonshot Fund for Direction. But I looked up the fees, folks. You talk about it. Ark has a 0.75% fee, and that's even with about almost $18 billion under assets. Moonshot's much smaller, only talking about, I think the article references about $200 million under management, but a lower expense ratio as well. So they're a sponsor, as I said, folks, but interesting. And I kind of don't understand the fascination with Cathie Woods and Ark. Kudos to her. You know, she saw the ability for tech to accelerate higher last year. But we see how that goes and how it comes with the whims of the technology sector. Stay tuned, folks. We're talking Forex with Teddy Kegstadt.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're going to jump over to our man, Teddy Kegstad. Folks, every trading day, you can reach Teddy at forex-trading-unlock.com. We talk to Teddy at 40 past the hour every Wednesday. We're talking Forex. We got a big day for Fed Day out here. We got a lot of action in the Forex market, as usual. Teddy Kegstad, good morning.
Good morning. Good to see you again.
Good to see you, too, man. Thanks for joining us at the new time during the 9 o'clock show. Teddy, where do we start, man? I was jumping around to some of the Forex numbers we take a look at every week when we chat with you. Of course, a big day in the Fed. Not sure if that's playing into what you want to talk about, but what's on your mind this morning?
Well, Fed Day, actually, that's going to make it quiet until 1:15. You know, they've been kind of quiet for the past couple days, you know. So now we kind of hit those little signals last week in a nice way, and the dollar over the past couple days has been obviously pretty strong. Today, it's a little choppy. But I think really right now, you know, we've been talking about the oil factor. Oil has been kind of stabilizing over the past few sessions. We kind of need a breakout there. Any big leg, if we start to break out to the upside, obviously that'll hit the certain currencies, which I'll get into in a couple minutes. And then also if oil starts to fall apart, I really don't see that happening, but the neutral trade maybe for a little bit, you know. So that one variable is starting to stabilize. Interest rates, you know, we have the Fed today. We know they're not going to do anything. We know they're going to be buying for the next, like, you know, how many months or years or whatever, at whatever.
They want to tell everybody forever, right? Right now, but I agree, yes.
Yeah, right. I mean, right now there's no – that's the one thing is we used to look for Fed days and, like, look for something. We know right now there's absolutely no way they're changing their policy, at least for the next 6 months, you know, because – inflation is something that you would think they would want to like start to kind of rein back in a little bit, you know, with just the way things have been over the past like couple months. And that's not a factor right now. Their key number that they're watching is employment, you know. Yes. So, and I think that's going to be kind of balanced over the next few months. And I think that's going to cause like dollar stability and not so much interest rate instability, if you will, you know. Okay. So we're probably going to have a lot of range trading for some markets. The only thing, like I said, that could cause certain markets to either trend in a positive or negative way will be the oil. So I'll get into that right now. So
perfect. As you say, I was hoping, because this is the part that I think is so awesome about at least I've really learned a lot in the last like 3-4 weeks of our conversations. Mm-hmm. So please go through it how you can, how you tie the oil market into some of these, whether it's commodity-based currencies and so forth, because this is an awesome education, folks. If you haven't heard these interviews, go for it, Teddy. I just want to kind of give that, because it's a great deal how it's my own mind, just wrapping my own mind about how things are moving in the relationships.
Sure. Okay. Well, the first one we're going to talk about is the U.S. dollar Canada. This market has been in a bear market, obviously, for over a year. I mean, it keeps making lower move lows, lower move highs, and no matter what, that is a downtrend. Even with oil stabilizing, the Canada still has been buffering new lows. Now, we have some political instability between Canada and the U.S. now that's been rising over the past month, which I'm shocked that we even have this going on. But that's not what the issue is. As long as oil is strong, that is going to keep the Canada banging on the lows. Like I'm telling you, anyone that wants to try and be an aggressive buyer right now, risking the lows because it's on the lows, is just wasting their money and wasting their time, because it's going to be a grind. Like if anything, if you're not a bear, if you're afraid of selling these lows, which I would be right now, I would say look for a bounce. Okay. But as far as like trying to trade that market and try and look for a turn, don't even think about it. Now that's the first one of the oil ones, because they're not all going to be reacting like this right now. So that's just with the Canada. Okay. So now let's go to the US dollar yen. Okay. Here's another one where that's going to continue to rally right now. Like I'm looking for a target of 110 now. Like remember we were talking like, what was it, 3 weeks ago, I was looking for a target of 107.5 to 108 even in the yen, and that was supposed to be by around now. And we blasted through in a couple days, literally through that, So, and we were talking about the gold trade. That's off the table now with yen. That there's now a divergence going on there. But the oil trade is not off the table. So unless you see a big sell-off in oil, the U.S. dollar yen, I think, is going to continue to batter through resistance. And that's another one where if you're trying to sell the yen right now, I think you're being a big fool, and it's not mocking you. It's just being like, you cannot fight the fact that you're not looking at the hourly, the daily, or the weekly. Even by the minute, it just continues to buffer higher move highs and higher move lows. Your sell-offs are not extreme, and then the velocity of the rally is very extreme, So this is the part where you get those trends where, how some people, you get in on a good trade and you're like, oh my gosh, I wish I would have held the trend a little bit longer because it went for a while.
It never stops.
These are the trends. Yeah, these are the trends. Like, it wouldn't shock me that unless we see oil back down at like $45 a barrel, which I don't see that happening for a very long time, you're not going to see the yen back where the lows were just a few months ago for a while. You're going to see the yen at probably 114, 115. I mean, by June, at the rate that it's going now, even with a sell-off, you have to look for breaks to buy right now because of the oil trade. Okay. Now, the one market where oil is also driven is the Australian dollar, which interestingly enough, if you look at that on a daily chart, you have a head and shoulders pattern forming. So if oil stays neutral, I think that's the one that may have just a slight sell-off as long as oil doesn't get a rally, versus the other ones, which I think are just going to continue their trends, because that one has been such an aggressive bull against the dollar for the past year, and plus it accelerated so big with the oil trade over the past couple months, So you may see a little correction in that one. So with the Australian dollar, what does I have? Yeah, you need to watch the lows. If it starts to make newer move lows, then that head and shoulders, if that gets confirmed, you may see a movement in that one as far as how that will go against the oil trade. Now, this won't happen though if oil starts to rally. If oil starts to rally, I bet you'll see the Australian dollar, US dollar make new move highs again. Like literally, like it'll start to just blast off. So these are things that anyone that's trading those particular currencies, you really have to watch out for. And now let's talk about the biggest one, the British pound US dollar, the second biggest currency in the index, in the dollar index, okay? That one right now, you have to look at it. Right now, I think it has an upside target of about about $1.1836 is the key, or that's for the euro, excuse me. For the pound, rather, $1.40 even is my upside breakout level. Okay. And my downside is $1.3779. As long as oil continues to hold where it's at and not get very bullish or bearish, I think you're going to see that go sideways. As the second oil starts to rally, you're going to see the pound try and blast to $1.40. And if it does, it's going to accelerate in a big way. Now, if the oil does get a sell-off, which I don't see it going on a big sell-off, I think right now it's just consolidating,
Yeah.
If you see oil get back down to $50 a barrel, then you'll see the British pound have a very nice sell-off, because if you look at the pound versus most other currencies, it's a monstrous bull. That's another market where if you're trying to sell in against these trends right now, and that's my biggest thing right now, is you want to trade the action, not the reaction. These trends are so strong that unless you have some major shift in these commodity markets, especially like oil, you are not going to see these trends stop. You're going to see corrections. In other words, meaning that whether the dollar is a bull or a bear, it doesn't matter. Whatever currency cross you're following in those oil-related ones, trade the trend. It's going to be your friend.
And I would agree, man, on oil. I mean, oil, you're sitting at basically the highs of $65 up near 68. Teddy, man, we appreciate the education as always. Have a great week, and we'll talk to you next Wednesday.
Absolutely. Take care.
Take care, man. Thanks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps down about 16 points. A little bit of volatility throughout the program this hour. You see the volatility on the opening bell down to about 39.30, back up to 39.40, sitting right where we're coming into the opening bell right now. Down about 16 points on the session in the S&Ps. Tech stocks getting hit, down about 1% right now on the NASDAQ 100, and the Dow clinging onto some positive territory. The Dow flirting with a record, 32,865 yesterday. The Dow positive by 66 points right now, 32,793. All the fireworks basically beginning at 2 p.m. Eastern time today. Press conference coming out at 2. We have, statement coming out at 2 p.m. Eastern time, a press conference following that at 2:30. Going to be really interesting to see how Chairman Powell balances the fact that we're going to have an upgraded economic forecast. But as Teddy was saying, last segment, folks, all right, he's going to be talking about employment. And he has a real valid case talking about that we're still 10 million people under the levels that we had prior to COVID coming in. When we got non-farm payrolls for February, we had about 143 million people on the payrolls. Back that up a year ago, we had 153 million people on the payrolls. You've seen some of those people leave the workforce during COVID. You may see some of those people come back to the workforce after COVID subsides. 10 million people is what Chairman Powell is concerned with making up right now. You're going to see him stress that at the same time that we have an upgraded forecast that looks potentially 7 or 8% GDP growth fiscal year 2021. How he balances that and whether he does a good job of convincing the market that they're in it for the long haul, potentially through 2023. We're going to see how the market reacts today, this afternoon, and we'll see how we come into that price point. Already, though, interesting when you got the 10-year right now pushing a yield of 1.67%, making new lows. You back this up on a 3-year weekly. We're now right where we were in the middle of 2019 in August and September, and we've fallen from a 140 handle in August to a 131 handle on the price of that 10-year. Thanks so much for tuning in, folks. Stay tuned. We got a man, Basil Chapman. He's coming up next with the Tiger Technicians Hour, live from 10 to 11. We get Fast Market at 11 o'clock. They're going to be talking some Walmart, right? They're going to be talking some Five Below. Then, of course, our man, Larry Pesavento, from noon to 1. Steve Rhodes at 1 o'clock. Dave White at 2 o'clock. Tom O'Brien, my dad, live from 3 till 4. Thanks for tuning in, folks. Have a great Wednesday. We'll be right back. Stay tuned.
Building wealth